All right, good morning, everybody. Took a little time over the weekend and cleaned out some of my indicators. Cleaned out one that I needed. So give me just a second. I think it's this one, but I exported over 600 indicators. The Thinkorswim was laggy. It was freezing up a lot, and sometimes you just got to clean house. But if you do it the way I did it, I exported anything that wasn't in a chart at the time. And for some reason, it was not applied. So if I don't have it, we'll just make do. Not a biggie. All right. We'll just try that. And if it's not it, then goodbye. I'm missing my central pivot range. Yeah, that'll do. That'll work. Good morning, everybody. Hopefully you had a good weekend. It's QRA week and FOMC week. The the base case knee-jerk reaction is going to be sideways into Wednesday. That would be, what we would expect off the cuff without even thinking about it. That's the immediate response. But I've shown before how it's not that simple, that there's extra bits of info that can come in and really shake things up when it comes to an FOMC week. Things like QRA that can radically alter the hurry up and wait sentiment, especially since a lack of participants is when the market can really move. And I know that's probably harder for newer traders to wrap your head around. You would think the more participants, the more movement we would get. But really, the more participants, the more disagreement we get, right? People are going short, people are going long. It's a two-sided market, and we don't expect exaggerated moves in one direction. But when there's a lack of trading, then a big order can move the market without so much competition or interference. So these lower volume moves don't usually stick, but they certainly can go untested or unchallenged, I guess is a good way to think of it. Sentiment is up around the world. There's some rumblings about a election interference in Venezuela, something to think about. Bitcoin is up. It's a continuation of last week's event. Um, so, so far, so good on that plan. Small caps are dominant this morning, up 0.75%. Europe is fine. Germany, at least, is above the quarter. Japan, basically flat. And same with Hong Kong, basically flat. You'll notice there's nothing said about QRA anywhere. If I wasn't mentioning it, or if you weren't hearing it from other sources, you're not going to see it in economic data schedules anywhere. At least none that I know of. Everywhere I look, the popular places that you would go to, there is no mention of QRA. This is the quarterly rebalancing. Yellen is going to give some proposed numbers today. I think it's 2, could be 2:30. And then on Wednesday, we'll get the actual numbers. We do have auctions today in the front end. So 3-month, 6-month. These aren't the big ones, but they still are auctions. They're worth keeping your eye on. We have McDonald's today. It's not the big one, right? We're looking for Mag 7 stuff. You see July 30th, we got Microsoft. It's one of the biggies. But for today, McDonald's is the biggest one on the list. And that's generally not going to be big enough, right? Some companies, just the CEO has a strong enough backing that when they talk, the markets listen. Some companies are just straight up big enough that their market cap moves markets. Mike McDonald's is neither one of those. The CEO isn't someone who can move the markets, and the company itself isn't a company that can move the markets. So probably not going to be too impactful either way. Bitcoin's pretty close to 70K at this point. Kind of flattened out a little bit since getting to this level. It's pulled back some, but for the most part, it's there. It's keeping it for the moment. So those Bitcoin proxies, Riot, Hut, Hive, Mara, MSTR, Coin, Hood, they ought to be doing reasonably well. We are at the weekly pivot point. I pulled this over so you can see the one that extends. We're above the daily pivot. That would be this one down here. Today's pivot is a narrower channel than last week on Friday and on Thursday, but it's not as narrow as it could be, like what we had on Wednesday, or even narrower than that. It can get so narrow that you don't even see any yellow. You just see the purple line. That's narrow. This, yeah, it's more narrow. Not enough yet. It's also an MDP. This is a missed daily pivot. It doesn't count today, but we would start counting it after today if we can manage to go all day without hitting it. That's a pretty big if at this point. Since we're at the weekly pivot, we're basically in the center of the basketball court. From here, we could, drive 2.5%, 3% in either direction before we would even begin to consider such phrases as being overbought, oversold, overextended, stretched. I don't really like that overbought, oversold language, but got to call it something. Last week, we talked about this, right? How far away we were from that pivot point. I don't have a perfect quantified value that says when we get X distance, it's too far. But that really seemed too far last week, right? It's about as much as you're going to get. Like last week, we're basically opening near the pivot. Last week by Monday, RTH, we were at the pivot, even though we started underneath it, we got there. This is a little different. We started at the pivot or just underneath it. We're there. We're holding it. It's a much narrower weekly channel too, considering what last week's weekly channel was and this week's. But again, it's not as narrow as it could be. Narrow channels imply that if and when we break out, those breakouts can grow legs and really run. Wide channels imply that if we break out, it's likely going to stall and fail and come back in again. These channels don't move the market. They don't make the market do anything. So, don't look at it as it owes us some sort of pause or move or anything like that. It's just giving us a basis, a starting point on what do we think the market's going to do, or what's it likely to do. For the ADRs, we're already at the ADR half on the upside. Usually we'll say things like, what's more likely? We're going to go down to the lower one, up to the higher one first. And we've already done that. The fact that we got there really early and we faded away from it through the kill zone, but came right back to it again, implies that the other one is on the table. So 55.60, which is the upper yellow line, is in play simply because we've left this red line and we didn't continue to fade away from it. We went right back to it. There is a phrase that I like to say that if we get to one side early enough, we can go to the other. And that is true. In fact, recently we went from the lower red line to the upper red line and back to the lower red line in the same day. So when we get there early enough, it does offer the opportunity that we can go the other direction. We got here really early last night, and we still haven't even managed to come back down to where we opened, let alone get beyond that and get to the lower one. There's also a round number down here needs to be taken into consideration, and we have the spot gamma levels, which we'll get to in a minute. But anything like a round number, 5,500, whether or not you see a spot gamma level there, it's a round number. It's an options level. Tom Sosnoff, one of the founders of Thinkorswim before it was sold to TD Ameritrade way back in the day, talked about, and this guy's owned multiple brokers. He owned and made Tasty Trades. He owned and made a company called Doe. They run a lot of educational stuff when it comes to options. The guy knows his business, right? When it comes to options and round numbers, he points out how a lot of people just really struggle at math, and he's not wrong there. And how a lot of options traders really struggle to understand options. They just don't do a good job with it, and they will gravitate towards round numbers and simple numbers because it's simple math. It sounds funny when you think about it in such a simplistic way, but we've seen it time and time again. So you see that round number, even if it's not an options level spot listed by spot gamma, just consider the fact that it's an options level of importance. It's going to get a lot of flows. It's going to have a lot of participants. We're still underneath the volatility trigger. We're still underneath zero gamma, but we're a lot closer to them than we were. So last week on Thursday, when we were talking about, how far we could fall, or on Wednesday when it just kept falling and falling and falling, we were below the zero gamma and the volatility trigger, and the dealers had to just keep selling into selling to try to maintain their delta neutral stance, right? But we're kind of resolving that at this point. We're getting back towards those levels. Once we get above it, kind of game change in the other direction. 53.40 is the put wall. So if we do start making moves to the downside, at least we do have some support down there eventually, right? We're not underneath the put wall, which would imply moves to the downside could provide a flash crash. That's not on the table when we have the put wall underneath us. And we have the weekly 10 period moving average back underneath us again. We're back above the 10. Still underneath the 3-week, the 10-day, 20-day. So there's still a lot of resistance and a lot of work if we're going to try to continue to make moves to the upside. This is CVI, it's cumulative volume index, and it wouldn't matter what I have on the chart, right? I could put Apple up there, VIX, anything. The upper part of this screen doesn't matter on what this indicator is doing. If we went to TradingView, which is where I really like to use this indicator, it would allow us to look at all of the US markets combined. Thinkorswim isn't that great. We can only look at one market at a time. I generally just leave it on the NASDAQ. This is cumulative volume. So it's looking at in aggregate, did we have more buying volume or selling volume? I'm on a weekly. The shadow here is Bollinger Bands. I applied those around the indicator and I added some moving averages, the 10, 20, and 50. Looking at the net volume, say just for July, since we're at the end of the month anyways, we're pressing the upper edges of this Bollinger Band. We're pushing the Bollinger wider, right? That's what happens when we test the edges. We start forcing the band to widen out, to expand. This is still very bullish, right? In the big scheme of things, there's still a lot more buying than there is net buying versus net selling. So again, this isn't reading the ES, right? It's not reading whatever I have up here. we've been looking for a 5 to 7% pullback before, the next leg higher. And we only have this 5% pullback. It's a 2-week decline. So far this week, we're green. We're playing around with that blue line, the 10-period moving averages, but a third week wouldn't surprise, right? Getting down into that 20-period moving average, 5,400, kind of just stretching our legs a little bit more before the next leg up. It's not off the table at this point. With QRA and FOMC on the table this week, those are really big events that can change the course of the market for the rest of the year. I mean, they're big, way bigger than the Mag 7 earnings combined. So we need this data, and it hopefully stresses the importance of how big these two events are, QRA and the FOMC for this week. Now, there's a broad consensus that there's not going to be a rate cut announced for July. So Wednesday, we're not expecting a cut, but we are expecting some guidance on forward cuts from here. So some kind of language about September on whether or not they're actually going to cut. And of course, they're going to reserve the right to not cut. They're not going to just very likely they won't come out and just flat out say we're cutting in September. Right? They won't make it that easy. I doubt they will anyways. And Jackson Hole is still on the table. Ten-day, 30-minute volume profile with TPO in blue. The point of control is still not expected to move anytime soon. We can go through most of this week and it's expected to stay right where it is. The only thing at this point that could move this point of control is if we come back down into that 54.85 area, or just call it 54.92 cog line that's down here. If we fade back down into this lower zone, we could build this volume out the rest of the way and move this point of control down. I would consider that very bullish in my bias if I seen that. Otherwise, we have 4 days that we're going to be chewing out this volume up here, and that is not going to reduce this volume at all. It's also not going to add volume anywhere, right? Like, we need price to stay in a particular spot and build the volume out. And as we're gaining new candles on the right side, we're losing candles on the left. But the ones that we're losing is above the pivot point right now. It's above that point of control. So it's not going to move anytime soon. And my main focus this week is seeing it drop down to our level. One, it would remove it from being over our head as a significant resistance. Two, it would act as a support level at our current location down here at that 5,500 area or 54.92 cog line. It'd be a developing support level and we're on it, right? It'd be fantastic. So I would consider that a very bullish action if we can get it this week. It's one of the things I'm particularly looking for. It also fits with that waiting on data scenario. If we do sit down here waiting on data, we build out a lot of volume at this level, it would be enough to finally move this point of control, which has been there forever. It seems like it's just been there forever, but it's going to move eventually. If we can get it at our level instead of over our head as a resistance, then I would consider that fantastic. Be great. Got a new VPOC level underneath us from Friday. Right at the round number, which is a little odd. If we were going to see a significant amount of volume near a round number, I would expect it 1 or 2 points above or below, since liquidity resides on the other side of the pivot and round numbers act as a pivot. Whatever, it's right on the line. It's where the greatest amount of trading activity took place on Friday. There's no disputing that, right? Because I'm not giving you a bias. I'm just telling you a fact. That's where the greatest amount of trading took place. So where the greatest amount of volume took place. There could be some trader's remorse if we come back down into that level. There's the expectation that we're going to see a heavy amount of trading again at that level. From a TRB standpoint, the longer we go sideways here, the more likely it is that we're going to roll over if we're just looking at a TRB, right? Trend line breakover. So it just kind of back up a little bit. Yeah, so it's a lot of ways generically to show this, but if you consider, a trend line and then a breakdown of that, right? And it can be something very narrow, like this little bit of a trend line and we break over it. It can be something wider like this, but the longer we go sideways after having run up gives us an opportunity to break that. So just because we're sideways here doesn't mean we have to break it. Just that it's not good. And we can see Thursday, Friday, and now this morning that 55.32 cog line in the sand. It's a significant level that we haven't managed to get through yet. And we need to. We got to get above that eventually. If we can get above 55.32, then we could really expand back in the other direction and maybe work on this gap that we left behind between Tuesday and Wednesday. Let me guess, I wiped out my weekly expected move. Yes, I did. And distance to 10. Wow. Well, when I clean house, I clean house. I'm not going to go dig them up this morning. Looking at what is down, because it'll be easier than looking at what is up. It'll be a shorter list. We don't have anything down enough other than, say, the 10-year. 10 years down 1%, broke structure, and it's expanding below last week's level at a considerable pace. 4.0 is the line in the sand that we're looking for, right? And we're below 4.2, which had been a critical level. So we got to get below that. 4.10 is going to be the next level, and then get into 4.0, just one step at a time. But here's the issue. We got the dollar in breakout mode to the upside. It's through last week's high and driving hard to the upside significantly. This is moving fast. So these two generally move in the same direction and move together. And that is not what we're seeing. Yeah, US dollar Japan sideways. So far, this isn't impacted by the move in the dollar at all. So stressing a lot of caution here, seeing this move in the dollar versus this move in the 10-year. It's kind of freaking me out a little bit. This is not the way things are supposed to move. We don't want to see it looking like this. So approach with caution. It's the best we could say, right? Just be very careful this morning. And the data isn't going to come out until this afternoon from Yellen. So, unless she's putting a wink and a nod out there somewhere, we really don't have any expectation that this is from her. With this move in dollar, I would have expected a bigger move in gold at this point. And I mean, sure, it's down a little, but it had already popped up first. Not really seeing anything respond to this move in the dollar yet the way we would expect to. You know, let's take a look at JGB 10-year. All right, it's not even below 1% yet. The Bitcoin proxies are dominating this morning. Mara's up 4%, Coin 4%. The FANGs, Google, Microsoft, Meta around 1%. Some chip stocks like MU, AMD up more than 0.75%. Apple had some news this morning. I didn't get to catch it all, but it seemed like there was an issue with the rollout of their AI. They're talking about setting it back another month, but they're still talking about getting it out to developers as soon as possible, since developers are going to be the ones who really kind of highlight use case for it. Yeah, we need more information, but at this point, waiting on data, it's going to be it very likely could be a very boring week. Pot stocks are up this morning too. It's a good start, but I mean, on the year, they already took a beat down. They came all the way back down to the start of the year. So everything that they made all year has been washed. We're basically right back where we started, around that $7 level. And it's trying to move this morning. We got that inside day breakout, but you know, it's just a lot of trash to get through. Could see some movement there as a day trade. Small caps tie into that too. The IWM is up. We could see more of a short covering rally in this space. Let's load that spot gamma number. So we're still getting movement out of IWM. Spot Gamma had this listed that their options were so extreme that Spot Gamma had it as a short. And obviously that didn't play out, at least not yet. But we have built this like classic flag at this point, this bull flag. Nice run up. We're just holding this base here, developing a range in this 10 points between 215 and 225. Looked like it tried to get out again this morning. This is the sell zone that we've got to get past. Until we get past these sellers and close above it, then we have to assume that those sellers are still present and that they're not done yet. Semiconductors are up, but after this beatdown, this is more of a dead cat bounce than anything else. And we're still inside of Thursday's range. So At this point, the fact that they're up, 1.25, 1.5, we have to get out of this Thursday candle first before we can do anything. And it still leaves Wednesday's candle and that half back 246.67. That's the next level if we can even get through our current level. Notice if we put on the 1,236, it lines up with the half back that we were just talking about, 246.60 something. So that's going to be the significant resistance for semis, even if we can get this 243.64 breakout. So sure, they're up, but that was a heck of a beatdown, and they've got a lot of work to do. We're close enough to this year-to-date anchored VWAP that I wouldn't be surprised if we go down there and get it anyways, no matter how bullish or bearish markets are. China ADRs, BABA, Baidu, JD, PDD, XPEV, NEO, all that group, they're up this morning after 2 days of sideways. Really nice start from a failed flag setup, right? If you think about this as a bear flag, we would expect a little bit of sideways and then a continuation lower. A failed bear flag would be going sideways and then starting to round back up the other direction, which would eventually cause us to have a cup, right? We would break to the upside, trend back up to the upper part of this range, and that would just be a big U shape like a cup. To get the cup, we got to have the failed flag. To get the failed flag, we've got to get this breakout back above year-to-date anchored VWAP. And up today doesn't mean we're going to make that whole move, right? It doesn't owe us that anyways. And it's very likely that this is just a little bit of an up day before a continued sell-off, because there's nothing in the China ADR space that says otherwise. So possible for, a day trade or even a few days of trade, but I wouldn't expect more yet out of that space. Crude is up, but we're still stuck inside of this range. We've been in this range for a couple of days now. We got to get out of it. Looking at it on an hourly, it kind of cleans things up a little of how much trash there is overhead. So let's get above 77.5 or even 78 before thinking that we could get more out of it. And we're a long ways from 78. There's just that much trash here that we've been chopping back and forth. We're again close enough to that anchor to VWAP that we're much more likely going to go there first before we're trying to get back to these previous highs. So sure, things are up this morning, but it's led by Bitcoin, pot stocks, China ADRs. That's not the kind of rally you want to see, right? That's not the depth and the background that you want for an S&P NASDAQ rally that sticks through the day. You don't want to run it on the back of small caps and solar and right. So keep your eye on breadth. Look to see if we're going to get, that strength in the Mag 7 to continue. Couple of different names that you can use for the Mag 7, or you can just make your own. This is one that has weights in it, but you don't need the weights. You can just use Apple plus Microsoft plus Google, right? The weights, I promise, don't make really all that much of a difference. We can see that they're up in the pre-market, which is better than if we had used, like NY Fang, because that thing doesn't move in the pre-market, so it doesn't give us anything to look at. So we're up in the pre-market, but we're still inside of Thursday's candle, even if we're starting to break out of Friday's candle. We got the 50 overhead, the 10 and the 20 are overhead, and the 10-20 is already crossed on the daily. That's not good. For the week, sure, we're still good here. I mean, we haven't got a 10-20 cross at this point, but we got that 10-week overhead and the 3-week we've still got to deal with. So the Mag 7 are up a little bit. We want to see that broaden out. Want see, more consumer discretionary, more financials. On the tech side, more tech than just some semi names, maybe broaden that out into communications and some old tech too. Oh yeah, small caps, they're a great signal. We got to give them credit when credit's due, but you don't want a market run by small caps for bullish or bearish on the day, because that implies that the short covering rally and pot stocks and solar stocks and biotech is running the show. And if we're looking for a rising tide, oh boy, that's not the kind of tide we want to see. I think it's going to be a difficult week. There's a reason that a lot of traders take the week off on FOMC week. When I was newer to trading, every day was a day I wanted to trade. Every day was exciting. It was another opportunity. And I would scoff at those people who'd say, well, I'm just going to take the week off. I'll be back next week. I'm like, why? There could be these amazing moves. Why you're not sticking around? But I get it, right? These are not the kind of days that match the cycle that we use, right? There's these 6, maybe 7 days that just repeat in the market over and over and over again. And we're trying to figure out how today is like one of those days and figure out which day today is. It's like mahjong, right? We're just trying to figure out what today's candle is. But when it comes to an FOMC week or any event week, when we're going to be waiting on NVIDIA's earnings, it's going to be a couple of days of sideways waiting on NVIDIA's earnings, or, Microsoft and Apple and those big names. It messes with the system. We'll get these lulled periods of inactivity and price going sideways, and then just these big breakout moves that get wiped out and reversed. And it's tricky. The flows that we use, even the tools like the dollar and the 10-year, are going to respond oddly. And they're not behaving in a way that would be common and appropriate. Correlation tools aren't working. Market breadth like CTIC, tick, weighted AD, those are very likely not going to function correctly this week. We're very likely to see things like market maker moves, those market maker move signals showing some kind of hedging, even if they're not actually hedging, because again, these tools are not going to be functioning correctly. So it's just very likely going to be a very dangerous, tricky week. And the best way to protect yourself in a week like this is to not trade it. I know it's not the popular statement, but I'd rather you just don't lose your money. So with that, everybody, happy Monday. Be careful, be safe. I'll see you all tomorrow.